I just want to talk to you about automated trading systems. Now, the reason an automated trading system is going to be difficult to trade to make you a profit is because at the end of the day, the market's made up of human beings. So normally I'll show you how to put the support and resistance in, how to trade with the price action in general. But the stock market's a 50-50 game because these automated trading systems most likely wouldn't work for you. So with that, what you get is a system that picks off a point. For those of you who don't know me, I'm Rob. And for those of you who do know me, welcome back. I'm glad you're still watching the videos. I'm glad it's helping and I'm glad it's doing something for you. Finally, my 30 years of experience is being put to good use and someone's getting some advantage out of it, at least. But today, I just want to talk to you about automated trading systems and why they actually won't work for you, why they're going to be problematic for you in your trading systems, in your trading careers, why you should never use them. Now, there are a lot of systems out there that are very attractive, and there are a lot of things out there where people will grab them and they'll run with them. But what you're effectively doing is you're allowing a robot to take over your trading, which is never a great idea because you're allowing the system to make the decisions for you. And I've told you over and over again, and I'm going to show you in the charts in a moment. We're going to go to the charts as we always do, and I'm going to show you on the system how you can draw those support and resistance lines in on a trending product. So normally I'll show you how to put the support and resistance in, how to trade with the price action in general. But today I just want to make it a little bit more detailed, and I want to show you on a trending product how you can actually put those little lines in much easier so that you can see exactly where you are in the markets and what you're doing. So we'll do that and we'll get there shortly. But for those of you who have seen my videos before, you'll know that I always tell you that the stock market's a 50-50 game because the stock market or Forex trading or any market that we make is made up of buyers and sellers. And both the buyers and sellers want to win. Now, the reason an automated trading system is going to be difficult to trade to make you a profit is because at the end of the day, the market's made up of human beings, not squiggly lines. And those human beings make decisions on a daily basis on whether to buy and whether to sell. Now, I accepted that we have a system or a product like squiggly lines that gives you a high probability of where your next trade is coming from. And that's effectively what the artificial intelligence or the automated trading does, is it goes back, it looks at past history, and it retrades that past history over and over again. But it's a mechanical thing that just keeps doing it over and over again. It's like teaching a car to drive around the block. And it learns to drive around and around the block, and it does it all by itself. And then you throw a brick in front of it or a rock in front of it, and it doesn't see it. It doesn't know it's there. So the difficulty of automated trading is that it is an exact, precise science based on a system and based on a win rate. Now, it does take the emotion out of your trading. I accept that. And it does take away that feeling of I need to trade out now or I need to trade in now. It does help you with that scenario. But does it help you with taking the right trades? And can you control your money with it correctly? Let's talk about that after we've been to the charts. Let's go to the charts first, and then we'll come back and talk about the psychology behind trading and why these automated trading systems most likely wouldn't work for you. With that said, don't forget, trading is risky. 80% of traders do lose money. And if you don't like risk and you don't like losing money, don't trade. And then obviously, you go down to the description below and you get your free Forex book from me where you can figure out how trends work and that sort of thing. It's totally free. It's a PDF. Go and download it. Go and have a bit of fun. Let's go to the charts. Let's go and have a look at the charting systems. And then let's talk a little bit further about automated trading systems. Let's talk about how we can get these levels in, these resistance levels and these support levels in on charts that look more like this Bitcoin chart, which has kept going up onto the moon, or charts which look like this gold chart where everything is just falling down into the doldrums on any given day. I mean, the euro US dollar falling down into the doldrums. Look at this US dollar ZAR falling down into the doldrums. How do you get levels off of these charts? What do you do? Well, it's pretty simple, really. This is a 4-hour chart. This is a lamp pole formation. This is a chart that's going off into the moon. It's going to the sky. Now, you can take supply and demand levels on a chart like this and say, well, you know, if I look at this, there's a demand of money here, there's a demand of money here, so this price should come back might take that and go back up. And that is a perfectly correct way of looking at the market. But you want to get your daily levels. You want to get your support and resistance in. Now, what you do is you take it to the daily level because that's where you want to pick up your level. And then you want to have a look on your daily level. What have I got on my daily level? What have I actually got here? Firstly, let's take it to the line chart and see if we've got any levels on the line chart that make any sense whatsoever as to a support or a resistance. Now, if I look at this, there is a resistance here that it's broken through. So that's done for. That is no more. That's actually quite an important level. So I'll tell you what, let's draw that in because it was a support and then a resistance, right? So what do I mean by that? Okay. Look here on the line chart. There's a resistance, there's a resistance, there's a resistance. It hit 3 times. It actually broke through this level previously to turn it into a resistance. It was a support, another support further back, and so on. So this is quite an important level. Now you'll notice I drew this straight rectangle area in here. This is an area of money where this price likes to hang out. It likes to come down to it, likes to go up to it. So this is an incredibly important area. But you'll notice I drew it in an area of a market. This was a bearish market where it was falling all the way down. It's been falling down, okay? And now we're at a point where we can only say it's turning around and it's breaking structure and it's deciding to go the other way. So what has it done? It's broken back through that level and it's heading on to the upside. So while I could draw a support level in here, what's the point really? Because it's actually broken to the upside. It's broken to the upside. The downside no longer matters. Unless it comes back through this and heads on to the downside, then you can draw a support level in again. So what we want is the next resistance level, the next level of importance. And the next level of importance that I can see here is right here. Why is that the next level of importance? Well, look at this. If I can ever get this to unstick from my mouse cursor, this is a resistance level on the day now, because this is now the support. Why? Because it's hit here, it's come back here, it's hit here, 1, 2, 3, 4, so at least 4 times, and it's gone through and come back and hits it. It's a magnet. It likes this little space, and there's another space further back, 5, 6. So there's a number of times where it's enjoyed hitting into this level, which is at 1850. Now you know on the day chart that this particular product, which happens to be the US dollar South African rand, enjoys hanging around the 1850 level. It enjoys hanging around the 18 level, and obviously it broke below that and it hung out at the 1750, 1730 levels. It's broken structure, going back up. Now you can take this back to the 4-hour chart and you can read it with a lot more insight as to what's going on. Now you can put it back on the candles. Now you've got a better picture of what's going on. You know that it was bearish coming down here. You know that it's broken structure and it's gone bullish again. What you also know that it's got a big green candle coming out of here, and that depicts that this is a long trade going to the upside to this daily resistance up here at 1850. Now look at the confluence with the demand area if you trade supply and demand. There's a demand area right here on this candle here, and it fits right into your support level, which is perfect. Normally, when it breaks through, you like to see a break and retest. I do believe that this one has already retested and also already retested here. So I think you could get quite a decent long trade off of this to the upside as it stands at the moment. And that's as simple as it gets, guys. You don't have to wait for the stars to align in the left, stars to align in the right, the moon to turn into green cheese to figure out how to take a trade on a product like this. If you want to know more about supply and demand, you can go and have a look at my previous videos. They'll give you a lot of insight into supply and demand and how you can trade it. Today I'm just teaching you how you can draw your resistance in, how you can draw your support in on a trend like this, because you take a look at a trend like this and you say, where am I going to find support and resistance? Well, there, I just found it for you. Okay, now another area of confluence on this chart is what they call a fair value gap. A fair value gap is where that high and that low leave a gap between the bar and the middle. See, there's a gap there between that low and that high. That gap is a fair value gap, and look where it is sitting, right in the money. So this area of money right here is probably one of the most important money areas you can find on this particular product. So this guy is most certainly going to come back in here, take some more money and go long. Or it's just going to simply go long right from this point and continue on to the upside. This guy is going that way, whether you like it or not. So that's it. That's how you draw those lines in. Let's talk a little bit further about why automated trading won't work. Now, if this was an automated trading system, the automated trading systems have to work on a moving average or a Fibonacci or some kind of price system, volume, whatever the case. They have to have some kind of technical ability. An automated trading system can't draw this general support area in. It can't draw this general resistance area in. It can't figure that out for itself. It's going to struggle with that. What it can do is, for example, on these high points here, it can work out exactly where they are. But then you've got to put some kind of programming in that gives it a wider berth. And how do you do that? Okay, so you might be able to tell it to look for those highs and work out those highs against those lows and give you some kind of automated trading based on that. But when does it take the trade? How does it take the trade? It's going to have to overcomplicate the situation immensely. Whereas if you're not using automated trading, you're simply looking at the charts, you're seeing this general area of money where buyers and sellers are working. This general area of resistance where buyers and sellers are working on a constant basis. They are here. They are working in these areas. They are putting orders in. You know this because this is a magnet. Think of it like a magnet. The price always gets there and then it pulls away and then it gets back, gets pulled back there and it pulls away, gets pulled. Why is it getting pulled back into this area every time and then dropping out? Because there's money here, because there's orders here, because the big pros, the big money is lying in these areas. And that's what you're looking for. You're searching for that. And if you look at this, like I said, I mean, you've got a demand, you've got a fair value gap, you've got a support area. It's all here. It's all telling you to take this trade long. Everything here is telling you take this trade long. So that said, you know, the market's a 50-50 game, right? You know that 50% of the time you could be right and 50% of the time you could be wrong. So what are you going to do? You're going to put a stop loss below this low. Why below this low? Because the automated traders will come down and look for orders in this area. The price will come down and be looking for those orders to take out. If you can trade it manually, put that in your mind. You don't have to put a line there if you don't want to. But if you want to put an order in, put it below the low, because the automators will come in and they'll be looking for orders in this area to take out, to buy, so that this can go back up. Because this is an area where it looks for money to buy and go back up. So now you put your stop loss down here. You work out 1% of your account. So if you've got a $100,000 account, you work out what's $1,000. $1,000. That's my risk to my costs, right? How many contracts can I take? Keep a risk of $1,000 here. Once you've worked that out, you work out the size of your trade, which is more than a 2-to-1 because you're targeting up here at 1850 and you down here at 18, and your stop loss is only at 1790, like 10 points away. You've got a huge risk to reward ratio, and it's a really reasonable trade. But you can work this out in your head. Automated trading system won't do that. And it's an automatic trading system. What it also does, it knows where all the orders are, including yours. So you're basically giving the pros the opportunity to know where your money is in the market and how, and it's almost like presenting it to them on a platter and saying, these are where all my orders are. This is how I trade. And if you want to take this money, all you've got to do is look where it is and just go and take it when you want it, wherever you want it, because there it is. I've just put it on a platter for you and I've showed you my hand. I've showed you where everything is, because that's what automated trading does. You've seen the charts. Now let's talk a little bit about these automated trading systems that are out there in the market. What are they actually doing? Well, what they're doing is they're taking certain points in the market, certain exacting points in the market from certain exacting systems. And normally these trading systems that they program these things to trail are normally lagging indicators. So what you get is a system that picks off a point that it remembers from past history and it replays that over and over and over again, and it keeps on trading it. No matter what the news is in the market, no matter what's in the background, no matter what feeling there is in the market, it's going to take that trade. And it's going to take the same trade for you every time. So where it's good for you is you don't have the emotion of worrying about the trade. You don't have the emotion of trying to get in and out of the trades, and it'll control your risk for you as you require it to do so. Trouble with that is it is gonna do it like a robot. And if things go pear-shaped in the market, it's gonna go pear-shaped for you, because it's gonna keep on trading unless you switch it off. Automated trading systems are not gonna help you because firstly, you don't know what it's doing unless you've programmed it yourself. You don't know what kind of system it's trading on. You know, at the end of the day, I always maintain it's so much better if you approach trading with your own strategy. And that is, don't rely on the little squiggly lines. Don't rely on the system. The system is a high probability trade. You're looking for a trade in the market where you know you've got a probability of winning. So you look at the market and you say, well, there's a trade. That looks good. That looks like something I could take. That's a high probability trade. And you take that trade with a view to you could win or you could lose. It's a 50-50. Now, an automated trade will only take a trade if it meets a certain specific amount of criteria, and then it will take that trade based on that criteria every single time, whether it goes good or it goes bad. Now, how many times have you seen in the market when you want to take a trade that the criteria is there, but then you look at it and think, that's not going to work? Many a time, to be honest, probably loads of times. How many times have you looked at your trade and thought, maybe I should close my trade out here? It just feels like it's time to close this trade. Where an automated trade would do what? Would keep on running. Yours, you'll close it out and you'll see, oh, thank heavens I did that, because it crashed straight after that. It's important to be in control of your own trading. And the best way to do that is with our usual business plan strategy, which you can go back to the last videos and have a look at, which show you how you can approach your trading in such a way with a psychology of winning, with a psychology of understanding that you're going to take a loss by managing your risk on every single trade. And I always tell people 1% on every trade, and over a period of 10 trades, you'll win 5, lose 5, win more on your winners, lose less on your losers. And that's the strategy for trading, but you can't teach a robot that. You can teach a robot all the little squiggly lines. You can teach a robot all the little times when to trade, all the probabilities, but you can't teach it how to manage your strategy. You can't teach it when to get in and out of the market, how to follow your market, how to follow your stop loss up, and that sort of thing. It can become very complicated with automated trading. So I'm not a fan of automated trading. I don't believe it's the right way to go. It is most likely the future. I believe in the future there's going to be a lot of automated trading, a lot more automated trading than there already is, because AI is taking over. AI is taking over everything. In fact, AI can even make this video better than I can. At the end of the day, we have to accept this as a reality in our lifestyles, in our markets, and what have you. But if you allow AI to take over your trading, there's a good chance that it's not going to work out as well as what you expected. But it could, who knows? I'm just not a big fan of automated trading. I hope the video works out for you. I hope it was good. I hope you enjoyed it. Don't forget to come back for the live shows, and we'll spot you through the window. Don't forget to watch those last videos and check the strategy that's going to make you into a profitable trader. Because these last videos here, they'll show you how to do it. Till next time, guys. Thanks for watching. Cheers and bye.